Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. It's been a day of bloodbath for the markets consecutively for the fifth trading session. We have seen the Nifty dropping almost 200 points in today's intraday trade. Right now, we've seen the markets, especially the Nifty 50, testing the 19,100 mark on the downside as well. Slightly recovery from the lowest levels, but still about 0.7% down in trade for the Nifty today. It's been a broad-based sell-off that you've been witnessing, whether it's the Nifty Bank, the heaviest weighted component, down about 0.6% in trade. The IT stocks that are declining, with especially the bellwether names like Infosys dragging the street in today's trading action. We also have realty space declining in space, and also the pharma space also losing some health in today's trading action. You can see a 1% downtick on the Nifty IT, and that's now trading near the day's low level as well. Apart from this, if we see, the broader markets have also lost a lot of ground. Both the small caps and the mid cap 100 spaces are down in the red. FMCG, auto, oil and gas, consumer durables, you name it, all these sectors are down in trade, barring just slight gains coming in on the PSU banks and the metal pack. Rest of the sectors are all declining. When we talk about the Nifty losers, Infosys tops the chart, 3% downtick for this one. Cipla follows the list along with Apollo Hospitals from the healthcare space that are declining over 2%. NTPC, Adani Enterprises, Bharti Airtel, Eicher Motors, Divis Labs, ICICI Bank, these are the top names that are big laggards on the Nifty. On the flip side, you do have a few names, just about under 10 names that are up into the green today. Coal India leading the pack, 1.5% uptake. Tata Steel, Hindalco from the metal space that are shining bright despite this muted trend. You have SBI from the PSU banking space leading, and therefore you can see the PSU banking index moving higher in trade. Tata Consumer Products, Nestle, Maruti, these are, and Britannia as well, some of the FMCG counters and the auto names that are still shifting gears to the top gear. When we talk about the F&O space also, the trend that you're seeing in some of the stocks that are defying gravity, you can see Delta Corp as the top gainer on the F&O pack, almost a 4% surge, and this is after the Bombay High Court's restraining of the 16,200 odd crore rupees of tax notice that Director General of GST had issued. And Torrent Pharmaceuticals, Nalco, Crompton Grease Consumer, these stocks remain as top movers on the F&O space. But time to welcome our guest on the show. Kush Godasara joins in. He's a market expert. Kush, explain to us, what do you make of the kind of fall that we've been seeing in the markets and today's sharp fall that adds on to the last 4 days of decline as well? And what are the key reasons behind the fall?
Good afternoon. Definitely, when we have met since last 2 months, every time we talked about the range of 19,200 to 19,800. But finally, we have reached this support of 19,200 today. The last time when Nifty was in the range below 19,200 was before 26th June. So you can certainly, notice that after almost 4 months, we have reached this support level. So this is significant. Secondly, reason is, we were much awaiting a profit booking. The reason is maybe the war, escalation of the war, many other countries joining the war. So people are expecting that if there would be, escalation in the war, crude prices will go up, and that will definitely affect Indian economy. So that is that's just the reason attached to technical correction, which was much expected since many months. Main reasons are financials. Banking stocks are going to hit hard. They had given very good rally. So I think, key reason or key stocks which are driving down markets are banking and financials.
Okay, but what strategy would you advise investors to adopt in this current fall? Is it this time to just stay away from the markets, wait and watch till things get sorted out, or should one really use this opportunity of dip to buy into the markets aggressively?
Definitely, if you are asking for the investors, which are long-term investors, it's very difficult to predict what would be the low. Yes, but we can at least give support levels. So I believe the support is next at 18,600, which is 200 average. So I believe that's 600 points away from current levels. So every 200 points correction, investors should start investing 25% of their saving. because I believe 18,600 would be the ultimate bottom as of now for next 2 months. So it's very difficult to predict the low. So as an investor, you shouldn't wait to pick the lowest point. Rather start averaging out. So if you are a mutual fund investor, SIP, raise your SIP for next 2 months or at least for next 3 months. Or if you are a direct investor in equity, buy 25% today, buy next 25% at 19,000, next 25 at 18,800. And so you can average out blue chip stocks.
Okay, fair enough. Apart from this, Kush, also help us understand, what should investors' strategy be beyond the equities? Is it also time to diversify, add on to some of the other asset classes, or should one not really get worried here?
Definitely, looking at the gold, I actively, advise on the international gold prices and silver prices, and looking at the gold rally in last 2 weeks, I think investors should, diversify their investment into gold asset as soon as possible. Maybe before Dhanteras, don't wait for, generally we Indians wait for a Shubh Muhurat to buy gold. But I think if the war is accelerating and if we break the 1980 today or tomorrow on the international gold prices, we may see a 2 to 3% jump in gold prices. So that is approximately 1500 to 1800 rupees for 10 grams. So I think we should diversify into gold. If you haven't bought gold or are waiting for say Diwali time, rather just avoid it, buy it just now.
Okay, understood that. But what would be the levels that you're watching out for on the Nifty right now? Looking at that 19,200 being breached on the downside that you also pointed out, how much more downside remains from here, and when do you expect a bounce back?
Definitely, I think today is the first, if we look as a short-term trader, we may feel that, oh, we have corrected 500 points in the last 2 days. But for me, it's just the start today because 19,200 was the ultimate support. So, as I said before, 18,600 is my first level. There are no major supports in between this 19,200 to 18,600. So, as a trader, I would advise to buy 19,000 puts. If we breach 18,600, then on the weekly and the monthly charts, I believe we are touching down 17,500. And but more convincingly is Bank Nifty. It is already below 200 average. It has already confirmed head and shoulder pattern, which gives us target of 40,900. So still 2,000 points away from here. So if you are a risk trader, go short Bank Nifty. If you want to play safe, buy 19,000 put of November expiry for Nifty.
Okay, got that. In terms of stocks, let me ask you a few questions and then maybe you can also share with us your own stock ideas if you have in the current market. First up on Infosys, I wanted a view. Sharp decline in today's trade, 2.7% downfall coming in. What would you advise? Kush, on Infosys, what would your view be? All right. I think there is some kind of a technical glitch. We'll try and connect back with Kush at this point in time. But looking back at the markets, they've improved from the lowest point of the day for sure. As far as the Nifty is concerned, 19,127 currently on the Nifty. 154 points of loss remains currently. But we've definitely improved from the day's low point. Would that mean that we will see a sharp recovery coming in the future trading spaces, or are we going to continue to see more volatile moves as far as the markets are concerned? Something that we will continue to watch out for. But let's quickly watch out for all the stocks in trade, especially when we talk about the kind of dip that we are seeing on the Nifty. You're seeing a lot of IT names really dragging, especially Infosys is what something that we have been discussing. Okay, Kush is back with us. Kush, I was asking you on Infosys as well. 2.7% downtick on Infosys, or what, 1370. What would your call be on this one?
I think IT stocks are going to be hard hit from now onwards because even Nasdaq, which is the IT index for the US, had gave a good run up yesterday. But currently their futures are also trading below yesterday's low. So I think IT stocks are going to be hard hit, and the results are not per expectations. So I think IT stocks are a good stocks to short from current levels. Maybe Infosys is a low beta stock, so as a short term trader, I would avoid shorting Infosys. But something like Coforge, I think you should still short Coforge. It's very high beta stock. So as a trader, you can gain quickly. Stop loss on Coforge will be 4980. and you may see 5% correction to 4700.
Okay, fair enough. What about Delta Corp? We've seen a sharp rebound in trade today, 3.7% higher for this one. This is after the Bombay High Court really restrained the 16,000 odd crore rupees of tax notice by the Directorate General of GST against Delta Corp. This has come in as a breather of sorts. But is it the right time to invest in Delta Corp? What would you say?
No, definitely I would avoid this counter because this is just the first step. Until we get a major clearance, we should not invest in, because I have been tracking this stock and I have seen many FIIs and institutional holders exiting this stock. So I
Okay.
think we should avoid this stock as of now.
Avoid this stock as of now. Okay. Any particular stocks that you'd like to highlight, Kush, where you are looking out for opportunities amid this kind of a dip that we are seeing in the markets
So as an investor or as a trader?
as an investor?
As an investor, definitely, there are two new age startup, we use definitely, which is one of them is Zomato. I think Zomato will have a good correction or a good rally from current levels. 94 is a stop loss. I think 125 could be the target by December end, because we have World Cup going on. So, people are getting together. We have Diwali. We had Navratri in Gujarat. So Zomato had, zoomed up deliveries 24 hours. So I think Zomato is a good stock to look out for in this correction. And second such stock is my trip. Is my trip, definitely I'm accumulating at current levels. 38 could be the stop loss. Target could be 60 plus, because that's the only startup company which has been in profit since inception in 2008. So that's a huge benefit for the investors. And earning per share is very competitively low to the industry. So is my trip and Zomato both are my pick during this downturn.
Okay. And the upside that you have for both of these stocks?
For Zomato, I think we could click 125 in short term, that is in 3 months. For Ismy Trip, in 3 months, you can touch 58 to 60. So in percentage terms, that it's almost 50%.
Okay, got that. So both Zomato and Ease My Trip Planners is something that Kush is positive on for long-term investors. This could definitely be a pick for the long term, and a huge upside is what you can expect from the current levels as well. And maybe you can use this dip to buy into the stock too. Many thanks, Kush, for being with us on the show and discussing all these insights with all our viewers. Markets down in trade, 150 points decline coming in on the Nifty. Broad-based sell-off, fifth day of a decline for the markets. In fact, over the last 5 odd trading sessions, we have actually seen the markets dip almost, if we see, more than 2.5% odd or so in trade. And of course, like how Kush was pointing out, the trading range that we have breached today comes after 4 months as well. So definitely take note of this, but don't get caught off guard at this point, or don't get into a panic mode. This is as a reflection of the geopolitical tensions that are rallying at this point in time, and which is why you see a knee-jerk reaction. At this point, good strategy could be to speak to your financial advisor, get into some stocks if you can, or otherwise continue your SIPs, or maybe increase your SIPs as well at this point too. Many thanks for being with us on this edition, but do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. Until then, thanks a lot for tuning in.